FTX is on track to raise $1 billion at a record $32 billion valuation, and this is really good news for Coinbase investors. When you have one of the youngest crypto exchanges out there raise money at the same valuation that it raised money just about 1 year ago, you know that the private equity market is completely ignorant of what's actually going on in the crypto space, and that the public markets like Coinbase are actually probably really good deals. As a result, in this video, I want to compare the financials of FTX and Coinbase stock to understand exactly why Coinbase is significantly undervalued and how the stock can easily be a 2x or 3x as the crypto market recovers over the next 2 to 3 years. I know that in this bear market, many folks are completely dismissing crypto, but these folks don't realize that the wealth is always built during the toughest times as an investor and not during the massive euphoric bull runs. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, I want to actually address a comment that recently came out from JP Morgan CEO Jamie Dimon about how Bitcoin and other cryptocurrencies are simply digital Ponzi schemes. I think this comment does a really good job of showing us that we are potentially near that crypto market bottom, as peak pessimism and fear is circulated around the media, especially from some of the highly talked about executives. I mean, this is the same guy who said back in May that Bitcoin has significant upside for investors and that digital assets could become the next big trend in decentralized finance. And so I think it's safe to say that absolutely nobody knows what they're doing in the stock or crypto markets, and you should never trust what these big executives are saying that are often being misrepresented by the media and outlets. And now let's be honest, this is something we have been through many times in the past. We happened to go through this in 2012, in 2016, and now we seem to be going through this in 2022. And the reality is that every single time we saw crypto prices decline, we always saw a significant amount of pessimism and negativity in the media, whose job is to basically cover what has happened, not what is going to happen. And with so many firms already filing for bankruptcy, I think it's safe to say we are hitting a capitulation phase in this crypto bear market. And as a result, the upside is probably much larger than the downside from current levels. I probably sound like a broken record when I say this, but the crypto bear market has gone through this cycle over 10 times over the past decade, and every single time the crypto market has recovered, and there's been a significant amount of wealth that has been created on the other side. We've all heard the news and media outlets that have been posting about Bitcoin millionaires and billionaires that have been made out of the bull runs, but obviously nobody actually wants to invest in the cryptos when they're at actually good and decent prices. And it's going to be those folks that take advantage of these prices and stick to their conviction despite all the negativity that are going to prosper at the end of the next crypto bull run, which as we all know is probably very much in the near future as the fundamentals of the on-chain metrics of Bitcoin continue to sustain. For those that don't know, the on-chain metric is essentially the network value that is typically transferred using Bitcoin. And as you can see, in 2022, the number actually went up by around $4 trillion from 2021, even though crypto prices are down over 70%. What this shows us is that the intrinsic value of Bitcoin has potentially gone up this year, but the price has gone down because of the excessive leverage and volatility that we saw in 21. And if you want to talk about capitulation, there is probably no other event that has seen this much selling than over the past 2 months on Bitcoin. And as you can see, over time, these kinds of troughs often signal near-term bottoms. But obviously that is more on the Bitcoin side, and instead now let's shift gears into addressing Coinbase stock particularly, and why my conviction has increased based on the recent data out from FTX. You see, what's happened is that FTX is potentially in the midst of raising around $1 billion in cash at a $32 billion valuation from private investors from Singapore and SoftBank, which is obviously over 2x what the current market cap of Coinbase stock is. And as a result, this is raising a lot of questions as to whether or not either FTX is significantly overvalued or Coinbase stock is potentially a screaming buy. If we compare the two companies on a pure revenue and profit basis, as you can see in 21, FTX did around $1.02 billion in revenue with an operating income of around $272 million. That is obviously very impressive for such a young company, but where this gets really crazy is when you compare it to Coinbase, which pulled in $7.4 billion in revenue and $3.6 billion of net income last year. Which means that not only is Coinbase doing more revenue than FTX, but they also have significantly better profit margins. Now, obviously in 2022, revenues have declined significantly for Coinbase, and right now they are an unprofitable business, which has resulted in a significant cut in the share price. But this is also potentially a very similar scenario for FTX, the only difference being that FTX is not a publicly traded company, which means that its valuation is not reflecting the skepticism in the media, and its revenue and profit numbers are simply not available to the public. And with the amazing relationship that Coinbase has with institutions who are often going to be the biggest whales, buyers, and sellers in the crypto markets, it's hard to see why FTX could be justified at a $32 billion valuation, almost triple that of Coinbase. And so what I think this really goes to show is that due to Coinbase's publicly traded nature, the stock is potentially more oversold than it would be if the company had stayed private, which is probably creating a good opportunity for long-term investors like us. And if you have any belief in the opportunity of decentralized finance, NFTs, or even institutional trading and stablecoins, then Coinbase is probably the best bet you can make in the stock market when it comes to betting on cryptocurrencies. And to be honest, what really sets Coinbase apart is that their management team is much more active than any other business I've ever seen when it comes to making sure their business can thrive through this crypto winter. Obviously, the Coinbase NFT app, for example, failed because essentially they launched it right at the peak of the NFT market. And as you can see, they only did around $6 million in volume, whereas some of the more popular NFT exchanges did over $3 to $7 billion in volume. But Coinbase's team is not just sitting on their hands and doing absolutely nothing. Instead, they launched a new feature called aggregated listings, which essentially lists these external exchanges' NFT products and markets onto their own app, even if they're not getting the external fees and revenue. As you can see on the right, essentially this is a way for Coinbase to keep its users on its own platform for the future, for when they can actually start to monetize them through NFTs as the market gains more traction. Now, I don't want to argue with folks as to whether or not NFTs are a scam or they're going to be something successful, but if folks were able to buy the internet, electric vehicles, and even TikTok, then I'm pretty sure that at some point NFTs will also be able to catch up. And it's just a matter of time until the next crypto bull run that Coinbase's NFT business could start printing more money. And as for answering the question as to whether or not Coinbase can go bankrupt within the next 12 months, I think the chances of that happening are pretty low. As you can see, based on the income statement and the ratios, Coinbase's current debt to equity ratio is only around 0.62, and it hasn't actually gone up significantly over the past 12 months, even though the situation has deteriorated. And the best part is that their current ratio is still healthy above $1, which means that they can potentially cover all of their debts in the short term with all the cash they have in the short term. Although their cash balance has come down over the past 2 quarters, it is still significantly higher than they were at the start of 2021, which means that these guys have a good chance of surviving through this crypto bear market, especially because they have a management team that has already been through the past 4. And that has resulted in a negative operating income for the company in the short term. At the end of the day, this company only went public during a bull cycle of crypto, and so the chances are during past bear cycles, the company also had negative operating income. It's just that we were not able to see it because the company was private. And it seems like that shock factor really scared a lot of people out of coin stock, which again might have caused it to be a little bit more oversold than it should have, especially if you compare it to FTX's valuation at $32 billion. But obviously, guys, that is just my take on this situation. So let me know what you guys think of Coinbase stock down in the comment section below.